Welcome to another episode of Equity Mates, a podcast where we explore what is possible in the world of investing. If you've just joined Equity Mates for the first time, a massive welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. I always say I'm excited.
You do.
Much to the...
You've said it for 8 years straight.
Much to the chagrin of some people that listen.
1,200 episodes. More.
Yeah. Still excited.
Yeah. Fair call.
But look, I am not just excited. I must say I'm also a little bit overwhelmed.
Okay.
Because it's been just 3 weeks since Trump has been inaugurated.
Yeah.
And it's not just been the news coming out of the US. It just feels like the news cycle is moving so quickly. So much so that often between when we record our news segments here and then when we release them, we're like, God, the news has moved.
Yeah. It's significantly moved.
Yeah. And it can be overwhelming for
annoying.
investors. So we're going to talk about that a little bit today and just remind ourselves about what's important when it comes to investing. But that's not all we're going to do. I've got a stock that I want to put on the table, and I want to introduce you to one of the best entrepreneurs you've never heard of.
Yep.
And then we're going to close out the episode with Cheat Sheet, where we look under the hood at some of the best investors in the world, what they're buying, what they're selling, and what we can learn from that. So a big episode of investing, unsurprising given that's the name of the show, Equity Mates Investing. Let's get into it.
News and markets.
All right, Bryce. Well, as I said, the news is pretty overwhelming. It can be hard to keep up, and it can be often, when the news is moving so quickly, you can often feel as an investor that you need to do something. So I want to start today with what I'm calling Ren's Deep Breath Quiz.
Okay.
Now, you don't know the answers to this. You're going to be playing the quiz.
I might know the answers.
Well, yeah, true. You haven't seen the answers.
No.
Yeah. So I got 3 questions for you. The first one is about Trump.
Yep.
So as I said in the intro, it's been 3 weeks since Trump was inaugurated, but it feels like a lifetime. In that time, we had tariffs, no tariffs, China's retaliatory tariffs. We've had tariff whiplash. We've had Greenland. We've had the Panama Canal. Now we've got Gaza.
Yeah.
We've got Elon Musk running around Washington with his gang of 20-year-old coders.
There's beds. I was listening to a pod last night. He's brought in bunk beds into these agencies to crunch data.
Yeah.
It's wild.
There was some quote from
untapped power as well.
I know. There was some quote from someone at Doge, which was like, all of the federal employees go home on the weekend. It's like the opposition have left the field.
Yeah.
It's like, why are we thinking like that?
Yeah, I know.
They also refuse to give their names to government employees, and they'll only give first names because one of them got reported on in the media. And anyway, it's wild. Anyway, but that's just one of the stories. Shutting down USAID, that happened. So it just feels like so much has happened. You, as an investor, you're like, how should I be investing on the back of tariffs and everything else that's going on? So my first question in my deep breath quiz.
Okay.
How has the S&P 500, America's benchmark index, moved in that time?
In 3 weeks?
Since Trump was inaugurated.
I'm going to say it's up 2%.
Up 1%. Yeah, but despite all of that noise, despite everything that's going on, stock market's just ground a tiny bit higher. It's basically flat.
Yeah. Well, I remember at the start of last week when Trump announced the tariffs over the weekend, everyone was saying it's going to be doomsday for the stock market. Comes out, drops, and then within 5 minutes he announces he's pausing it with Mexico. Yeah. Market's back, all good.
Yeah, I know.
It's crazy.
Let's stay in America for this next one. The second question is related to AI.
Okay.
So, the 20th of January 2025 won't just be remembered for Trump being inaugurated. It will also be remembered for the day that DeepSeek R1 was released. That was the Chinese AI model that shook the market. Mark Andreessen, the venture capitalist, called it AI's Sputnik moment, reference to when Russia got the first satellite into space, Sputnik, which really sparked the space race. Nvidia had the worst single day for a stock of all time in terms of value lost. Lost over $500 billion in value on that day. Nvidia, since its launch, is down 9%. Trump has called DeepSeek a wake-up call for US big tech. You could be thinking as an investor, panic stations. Things are not good. I need to sell. Using FANG Plus, the ETF that tracks the 10 biggest US tech companies, how do you...
Yeah.
What?
It also has some random ones in there. Like, it has CrowdStrike.
Yeah, okay. Maybe not the 10 biggest, but it's got Meta, Nvidia,
It's got the big
Microsoft,
dogs.
Alphabet,
Yeah.
Amazon, Apple.
Yeah.
So as a proxy for big tech, how do you think FANG Plus has gone since DeepSeek was released?
Since DeepSeek was released, depending when you looked at these numbers, like I know last week that Alphabet struggled, Nvidia has struggled, Apple struggled. I'm going to say it's down.
They've all had momentary struggles, especially around earnings season. But zoom out from day to day.
Since DeepSeek, though, that wasn't too long ago.
3 weeks.
Well, I think with that hint, then it's up. It's 4%.
Up 2%.
Okay.
Yeah. So again, it's just this reminder that there can be so much noise in the media, but you've got to focus on what matters for these companies and what matters as a long-term investor. Now let's bring it back home. This one is less related to our investing, but I think it again highlights how the media report things, how media incentives and long-term investing incentives perhaps aren't always well aligned.
Yeah.
Anthony Albanese has been in the media this week.
He has.
Let me read you some of the headlines that have been floating around.
Yeah.
News.com.au, Albo's mammoth rental income revealed. The West Australian, revealed eye-watering amount Albo is raking in from rent. And this one from Sky, out of touch. Prime Minister Anthony Albanese rents out $4.4 million mansion in Copacabana, New South Wales. So
Get around Dutton's.
Well, yeah, he's also, it came out that he's selling his $12 million property portfolio.
Dutton.
Yeah. But I think he owns more, but anyway.
I thought he was, yeah.
Separate conversation.
Yeah.
But how much do you reckon Albo's earning from this rent?
So I think I've seen the news.com headline. It was like 110K or 120K or something.
Less than that,
really?
yeah.
Oh, I don't know then.
$78,000 a year. Yeah,
okay.
$1,500 a week.
Right.
Which, side note, just from an investing point of view, that works out to be a rental yield of 1.7%.
Wow.
Does make me think Albo probably could have saved some political pain and taken his money and parked it in something that was paid a better yield and wasn't as politically sensitive. But that's a separate conversation. But look, that's the deep breath quiz, and that's just a reminder that there is so much happening in the media, but so much of it is noise. And it's just really important, I think, for us to focus on what matters as investors.
Long term.
Getting our personal finance habits right, and then putting it to work in the market, and remembering that the thing that drives stock market performance is the underlying companies that are hiring the smartest people they can, that are working to bring new technology to market, that expand the markets they operate in, and innovating ways of doing business. They're the things that drive long-term stock market performance. And the story of the stock market over time is it has climbed this wall of worry over and over again. Political upheaval, economic upheaval, trade wars, real wars, pandemics, whatever it is. The stock market climbs all the reasons for you to be concerned, all the reasons for you to not start investing. And I think even if we just look at the last 5 years, perfect case study of that. The last 5 years, 2020, we had COVID. You could be forgiven for thinking I'm not going to invest because of that. 2021, you could then look at the stock market and say valuations are too high, I'm not going to invest now. 2022, inflation was coming through quite hard, and you could say now's not the time to get started. 2023, interest rates were rising. We had 13 interest rate rises here in Australia. You could say now's not the time. Rising interest rate, not a good time to invest. But in that time, depending on which market you're investing in, you would have doubled your money. There's always a reason to not get started, but that shouldn't stop you from getting started.
And take these opportunities as well to get into some of these big companies when they're wiping $500 billion off their market cap. Yeah, you should be excited by this, in my opinion.
Definitely,
Yeah,
I'm excited.
Like some of the
not maybe less the
not,
US
not on the political
stuff.
front. No. Like, and as we've said, like people conflate the two in some instances, like what's going on over here, that the economy and the market is the same. And so it's like, sure, what is happening in the US is obviously just wild, and we have major reservations about everything. And it does flow through to wild swings in the market. But like, we've been looking at some of these companies for years, and like taking advantage of Alphabet down 7% might be, why not?
Yeah.
You know? So, yeah, get excited.
Yeah, it's like, so Alphabet is a classic example of expectations management. So they fell 7% because China opened an antitrust investigation into Android operating system. And then because they didn't meet expectations for their quarterly earnings, their revenue grew at 12%, their profit, their earnings per share grew at 31%. But
Like,
they just didn't meet expectations. But it's like, that is a strong underlying business that's growing revenue and profit double digits.
It's crazy.
Yeah.
It's crazy.
Yeah.
And you just look at like the antitrust stuff. Like, this is stuff that they have faced year after year after year after year.
Some of the Chinese phone makers use Android as an operating system, and maybe they won't be allowed to do that anymore. But Android has a 75% market share in the mobile operating system market. And even if these Chinese phone makers can't use their platform, they'll still have a majority of the market. And, you know, that allows them to prioritize Google Chrome, and everything goes through the Play Store, and all of those, you know, the problematic business practices that we don't love, but have really powered Google. And you got to just ask, like, what is noise and what's going to change, like, the underlying businesses that drive the stock market.
Exactly. Anyway, if you want to keep up to date with everything that is going on in the world of business, make sure you're subscribed to our daily newsletter. You can find a link in the show notes. We send you the headlines that we think matter and you can read them in less than 10 minutes. But not only that, we have now turned that email into a podcast. So in less than 5 minutes a day, I would say, you can listen to all of the important headlines. It's called Headlines by Equity Mates. You'll find it in all of your podcast players, so make sure you check that out. So we love talking about stocks here, as you may have recognized on Equity Mates, but we love talking about the business leaders behind some of these stocks. And at the top of this episode, Ren, you teased out that you have found perhaps the best entrepreneur that we've never heard of.
Yes.
So without further ado, tell me who this is.
Well, let me tell you about the company first.
Okay.
Give the answer at the top. The company is QXO.
That's the ticker or the name?
I'll give you one guess for its NASDAQ ticker.
QXO. It better be.
Yeah. Yeah. So, and this company...
Is that an acronym or what?
No.
Okay.
I think this guy has started so many companies, he's just run out of names. I'll go through it because but QXO is a building supplies company.
Okay.
Boring?
I would say no. I've learned my lesson in saying these things are boring, but it could be perceived as boring.
What about this? It's a building supplies company that currently doesn't supply any building products.
Interesting.
Intriguing.
Yeah.
So to understand this company, you need to know Brad Jacobs.
Okay.
Have you heard of him?
No.
There you go. Best entrepreneur you've never heard of.
Very vanilla name.
All right, Bryce Lesky.
That's not vanilla.
No, it's not. So XQO, depending on how you count it, is either between his fourth or his eighth business that he's founded.
Okay.
Because there's been some spin outs and some other things. And also, like, what did he found and what did he buy? But to give you a bit of his history, the first business that really made him was a company called United Waste Systems. He started it in the 80s, late 80s. And the idea was to roll up rural waste management businesses.
Nice.
That sold to Waste Management, the US
big dogs.
waste management giant, in 1997 for $1.9 billion.
Wow.
So he did pretty well there.
Wow.
That then led to his second business called United Rentals. Still listed, New York Stock Exchange ticker URI. It was a roll-up of equipment rentals businesses.
Okay, bit of a theme here.
Are you sensing a pattern here? Yeah.
The roll-up king. Kellogg's
then
roll-ups.
he left United Rentals to start his third business, XPO.
Okay, so he's now into the three letters.
Which is also listed, XPO. No prizes for guessing what it was doing there. It was also a roll-up, this time in the logistics space.
Okay.
XPO spun out 2 businesses that are separately listed now. This has only been recently. So there's GXO Logistics, that spun out in 2021. And then there's RXO, which is a trucking business which spun out in 2022.
Still owns all of them?
He would still have major shareholdings in all of them. Yeah. They're all publicly listed though. Yeah. Now, to give you a sense of how those businesses have gone. So United Waste Systems, he sold for $1.9 billion. Side note, Waste Management, the company that bought it, is up 5,500% since 1989.
Wow.
Pretty impressive. United Rentals, that he started in 1997, up 4,700%.
Yeah.
XPO, since 2011, up 4,200%. And then the other 2 spin-outs, GXO is actually down 25% since it listed in 2021. RXO is up 17%. But they're all multi-billion dollar businesses.
He's worth $8.4 billion US.
Yeah. So
Look at him.
So United Waste Systems, United Rentals, XPO, GXO, RXO, all multi-billion dollar businesses. And now that leads to XQO.
Okay.
So
roll up.
Have a guess what he's doing.
Well, you said at the top building supplies company. So I'm imagining he's rolling up building supplies company.
You have absolutely nailed it. The playbook for him is really simple. Find an industry that's fragmented and is a technology laggard. That's really his secret sauce. And then roll them up. So
is it technology? Okay, nice.
So make a lot of acquisitions of smaller players.
Yeah.
And then bring technology to how they operate to drive efficiency. And so that is his playbook. It's not a complex playbook, and it's a playbook that a lot of private equity players now try and do. The difference is in execution. And this guy's got a track record of execution. So the question is, what's the go with QXO? What's happened recently? About 2 years ago, he started selling down his stake in XPO. He said he had one more in him. He said, I've got one more, just one more, you know, I still feel young enough to give it another crack. And so this is his one more. QXO targeting building products distribution. It's another fragmented market he sees where technology is not used efficiently to help businesses operate well at scale. So the plan is to just roll out his playbook one more time. So how did he come to own QXO? He put about $1 billion into a software company, a listed software company called Silver Sun Technologies, renamed it QXO. And then last year he raised about $5 billion US.
Which you can do if you have a massive track record.
Yeah, you can do it. If you don't have a track record and you can sell investors on the dream, you can also yeah. So QXO today is Brad and a pile of cash.
Wow.
And in November last year, he approached his first acquisition target, Beacon Roofing, which is listed. They do about $10 billion a year in sales, and he's trying to buy it for about $11 billion. So shareholders there don't love the deal. But he first approached in November. There's been a bit of back and forth. Like just last week, the company adopted a poison pill to stop him being able to do like a...
share takeover.
Hostile takeover. Yeah, there we go. But that's still ongoing. So, look, I don't have a position in it now. I am pretty tempted based on his track record. QXO.
Yeah.
But for me, this is a fascinating story and
it's
an entrepreneur
crazy entrepreneurship.
We should know.
Yeah. I wonder if there's a book about him because he'd be the ultimate deal maker.
He wrote a book last year. It's called something like How to Make a Few $1 Billion. Good name.
Nice.
Good name for a book.
Nice. I might put that on the list.
Yeah. So what do you reckon?
I love it. I love the thought exercise, though, that we've gone through a few times just as mates around, like, what are the good roll-up industries? Like, what are those fragmented industries that have, good cash flow? I like the second part of it as well. It's where it's like technology laggards, and it's like you're not just coming in and rolling up a business and hoping that economies of scale are the main driver. It's like rolling up a business, economies of scale, plus what can we introduce here that fast tracks. So yeah, I like that. We should do that as a segment. Yeah,
well, I guess the challenge is, when he started United Waste in 1989, the private equity industry was pretty nascent, and
that's true.
The idea of roll-ups weren't as ubiquitous.
Yeah.
But like if you look at the concept of roll-ups today, every private equity company it's one of their playbooks, and everything from pet supplies to medical centers and dentists to all, self-storage, like everything's getting rolled up these days. So for me, the opportunity set probably isn't as rich as it was back then. Not to say there isn't opportunity, and not to say this isn't a great business.
I think
but like Bryson Wren's roll-up shop is probably not top of my list.
I don't know what there is, but I reckon weddings is one. Like,
that's interesting.
I can't think of like everything's so fragmented.
White tops.
That's just, what's that? That's
a wedding brand.
Is that national?
Don't know.
Yeah.
Don't think
like
so.
Photography, music.
That's true. Yeah.
There's
Baker
so
Boys.
many tiny suppliers.
Baker Boys.
Yeah, but like again, is that just Sydney?
Maybe.
I don't know.
Yeah, you're right. It's true.
Like,
yeah.
But you can't bring technology to that sort of stuff. It's just
you definitely can.
What,
like
the
book,
band?
Book a band, just select the
all.
instruments you want, and interesting. Well, maybe we clip this out of the podcast and scope it out ourselves. Good industry wedding. I can attest that they find ways to get lots of money.
Good cash flow. Sorry, so just to close out Brad Jacobs, so if you were to take a position in QXO today, you're just taking a position backing him that he's going to be able to do it. He doesn't actually own anything.
Well, no. The company, if you look at the company's financials, it makes like $30 million a year from whatever Silver Sun Technologies was doing back in the day. And if you try and look at its like price to earnings or anything like that, it probably won't show you, or there won't be anything. Its market cap is basically the value of its cash. The market cap is like 5.9 billion.
Yeah.
It's got, and if you look at its balance sheet, it's like a few million each year cash on hand, and then bang 5 billion.
Yeah, it's not a SPAC, but it's kind of like he's got the cash and he's just now going to go out and deploy it.
You're purely backing him.
Yeah. His final swan song.
Yeah. But you've got to be careful, because a lot of peak performers at the top of their game have thought they had one more in them.
Brady.
LeBron thinks he has one more season. Brady thought he had one more season. CEOs think they have one more year. They should have quit earlier. Prime ministers think they have one more term and they should have quit while they were on top. So just because he's done it before, Kane Corns thought he could be a fireman. Just because he's done it before doesn't mean he can do it again. But it's certainly going to be a really interesting story to watch.
Love it. Well, if you have an entrepreneur that you think is worth bringing to light, make sure you hit us up. Join us in the Facebook discussion group or equitymates.com/contact. We would love to hear from you.
A cheat sheet is a quick reference guide or concise summary of important information. Usually designed to help someone quickly recall key points, formulas, commands, or concepts.
All right, it's time for Cheat Sheet. This is a segment where we look under the hood at some of the most famous and successful investors from around the world. Now, a lot of this information is publicly available, particularly for US investors, through what is called a 13F, which is where they have to essentially submit their publicly listed holdings in the US. So you can find the likes of Buffett. Today we're going to look at Michael Burry, Bill Ackman, you name it, they're all there. And it's a great resource to actually get an understanding of where these guys and girls are putting their money.
I actually reckon there's one better resource, which is Ticker. TIKR is the platform, ticker.com/equitymates. I'm pretty sure there's a discount that you can grab there. That's where we pull a lot of this information from, just because they aggregate 13Fs, but they also look at other sources of information like company filings and stuff like that. And then they have a track investment gurus section where you can just search. You can search, like Magellan or Caledonia from Australia. And then you can search like the Burrys and the Buffetts of the world as well.
We'll put a link in the show notes where you can head to Ticker and sign up for free through our landing page. Make sure you check it out. It's an awesome resource. But today, Ren, we're going to start with Michael Burry, who is well known for predicting the 2008 financial crisis crash.
He's well known for predicting 7 of the last 2 recessions.
Wait, what?
He calls constantly
calling. Now, Michael has a pretty concentrated portfolio, 6 major positions. And I guess the summary for me is that it looks like he has a very strong bet on Chinese tech and the Chinese turnaround. So some of the big names in his portfolio, he's got substantial holdings in Alibaba, JD.com and Baidu, 3 massive Chinese e-commerce internet companies. They have seen pretty significant stock declines over the last few years, given the worries that are going on over in China. JD down 67%, Baidu down 61%, and Alibaba down 72%. So I take from this, Ren, that Burry perhaps thinks that the worst of the Chinese route is over and is taking some positions in these. What you've got to be careful with those that he might have owned these for a number of years before they all crashed.
Yeah, you can look back on 13Fs, and Burry is someone who turns his portfolio over pretty frequently. I remember doing a segment on the show a couple of years ago when he was like all in on private prisons.
Yes.
GEO and Civic Group, I think is the other one. So yeah, but you're right. We don't know when he's bought them. And 13Fs, you have to file up to 90 days after the end of the quarter. And so, and they're just a snapshot of time of what you held at the end of the quarter. So, you know, he could have sold out of a lot of these positions by the time we see them. But it is still interesting to see what they're owning at any one time. And the interesting thing is, year to date, so what are we, you know, a month and a week into the new year, Alibaba up 19%, JD.com up 18%, and Baidu up 8%.
There you go.
So if he has held those positions, he's done all right to start the year.
Yeah. It's not the only positions, though. As I said, 6 positions in total. A new position that he has in there is British American Tobacco. I think it's been going pretty well, so he obviously is pretty confident that that will continue. And also Shift4, which is a payments company, and Molina Healthcare, which is in insurance. Big bet on China and a couple of US companies to close it out.
Looked up British American Tobacco. They're up 13% to start the year.
There you go.
Yeah,
that's pretty strong. As we said at the top of the episode, the US market's only up 2%.
Yeah, these these tobacco companies, British
crazy.
American Tobacco, Altria, they just keep going.
Yeah. That's because people keep smoking.
Or vaping.
Yeah.
Or one of them bought Zyn, the pouches.
Yeah.
People just love tobacco.
They do. Nicotine.
Yeah.
Yeah. Well, you can have nicotine without tobacco.
Yeah. Like vapes.
Yes.
Yeah.
So that's Michael Burry. The next one is Bill Ackman. So he runs Pershing Square Capital. You can actually invest in, not in the fund, but in the business. It's listed in London. So if you want to have a look at that, it's worth checking out. But he's made a fair few portfolio changes. He added 4 new positions: Nike, Brookfield, Seaport Entertainment, and Fannie Mae. Jeez, haven't heard of Fannie Mae in a while.
Yes.
So a few things to note. Brookfield, they're a Canadian investment firm. They manage about $900 billion in assets across real estate, infrastructure, energy, private credit, you name it. It's now his 2nd largest holding.
Yeah, people might remember the name Brookfield from the AGL tie-up a couple of years ago, which they didn't claim. They didn't get it in the end.
Don't think so. I think it fell through,
And I think they maybe even looked at Origin at one stage as well. But yeah, they're like a Canadian infrastructure giant.
Yeah. So on the sell side, Ackman reduced his positions in Hilton Worldwide, the hotel chain. They have absolutely ripped to start the year, up 40%.
Yeah. In 2024,
in 2024, up 40%.
Yeah. We're in 2025 now. It's up 5% in 2025. Not a bad start to the year. So.
Yeah. So he's taken some profits there, rebalanced a little bit. And 2 other sales, Restaurant Brands International and Canadian Pacific Kansas City. But both of them still remain positions in the portfolio, just trimming down, rebalancing.
Now, Restaurant Brands International owns Burger King, Popeyes, and Tim Hortons. They're like a big player in the... Would you call them fast casual or just fast food?
Fast food.
Fast food. And they've been like a real mainstay in Ackman's portfolio for a while. So, yeah, again, just taking some profits off the table there.
Yes.
Yeah.
So two very notable investors. As we said, you can find all this information through Ticker or just Google 13F for an investor that you're interested in. You'll probably find some information there.
One thing we didn't touch on it too much on the buy side, but Nike for me, Ackman buying Nike is a really interesting one. Mr. Beat Up, Simon, joined us on the podcast last year and made the case for Nike. They were going through a pretty bad time. The CEO got the flip in the end. The share price was down. They'd gone all in on online and e-commerce, and they'd really hurt their traditional retail sales channels. And so I guess they're trying to turn their fortunes around. The big thing for me is Nike, the running shoe company, missed the running boom and lost market share to the likes of Asics and Brooks and a few other smaller players, Hockers and the like.
Yeah.
So Nike for me is an interesting one to watch, and potentially in the midst of a bit of a turnaround.
Yeah, I mean it's gone sideways since Mr. Beat Up came on. I think Mr. Beat Up came on midway through last year when it plummeted. It was at $72. It's now at $74.
Yeah, okay.
So it's gone up. It's come back down, up a little bit, but trading sideways.
Yeah.
So consolidating a little bit, perhaps.
Interesting one to watch, I reckon.
Definitely.
Yeah. One more thing about Nike that I've got to tell you, not super related to investing, but so have you followed this NBA trade, the Luka Doncic and Anthony Davis trade?
Yeah.
So the Mavs general manager who made the trade, there's been a bunch of stories coming out about him, and that people are calling it like one of the worst trades in NBA history. I don't know enough about the sport to tell you if that's fair or not. But this GM hasn't had a great track record. He used to work at Nike, and the story goes he fumbled the Steph Curry meeting. So they were pitching Steph Curry back in like 2013. He was like a GM at Nike or something. Got Steph Curry's name wrong.
Oh, what?
In the meeting.
Oh, what?
Was calling him the wrong name.
Oh, what?
Steph Curry leaves and goes to
no way.
Adidas or Under Armour or someone, and then becomes, multiple times NBA champion.
Oh.
And now this guy has followed it on, somehow got a job leading the Mavs.
Oh, no.
And then fumbled
Loses.
maybe the bag on a generational player in Luka.
Who is this geezer?
So not to do with Nike's stock at all.
But still a good story.
But a good story.
Yeah. Well, that brings us to the end of today's episode. A reminder, if you would like to keep up with the news, make sure you check out our newest podcast in the Equity Mates media stable. It's called Headlines by Equity Mates. In less than 5 minutes every day, you can get up to date with everything that's going on in the world of business. But that brings us to the end. As I said, Ren, always great to chat stocks. We'll pick it up next week.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.